Good day, all. Ira Epstein with your financial market wrap-up for this Thursday, and we're at the 13th of April. Tax day's coming soon. I think it's the 18th, 2023, and we're just after 5:30 p.m. You know, I want to thank you, and I want to say it ahead of time. If you like what you see here, and I work hard at these, please take the time out to just give a click. It's right in front of you. And all it does is that helps us on YouTube and the other stations. Remember, if you want to join us and see my morning subscriber videos on the ETFs, the stock market, if you don't go to our website to do it, you can join right here by the join button that you see on the page as well. We just put that up and people are already doing that. Now let's talk about today. You know, we had the live webinar. I had so many questions on different charts, I couldn't get to them all. It's rare that I can't get to them all. And I went overtime a couple of minutes and I said, I'm going to be an hour. I can't do this. That's how many different questions we had. And I appreciate it. Love doing the charts. I try to make it easy, answer all the different types of questions. And it's fun for me, and I hope it's a lot of fun for you. But where are we? Well, tomorrow you're going to walk into the bank earnings. So you're going to get a series of them: PNC, Wells Fargo, JP Morgan, Citi. We're going to see BlackRock's earnings. I think United Healthcare comes out tomorrow. We got a lot of the big boys, early start to what's going on. So the season starts kicking off. I want to see the impact. Now, is it fair to say that what happens to the big boys is what's going out there in the country? I'm not sure. The second thing, I keep reading about this wave of problems that's going to happen with commercial real estate, and I am of the opinion, as you know, that your friendly banker isn't going to be so friendly sitting across the table. However, if you go across the street from your friendly banker, there's going to be a guy all smiles. Hi, I'm so glad that you came in to talk to me. And private equity is waiting. Now, they're going to charge a higher rate. They may not give you what you want, but there's some choices that are going to be here to be done. It doesn't all get that dire. What should happen is that the B and C buildings that can't make it should be forced in some manner to go down. And what happens then is the building doesn't disappear. Somebody comes in, you've always seen this in bankruptcies, picks it up, dusts the building out. They come in at a better price. They're not saddled with debt. They refurbish and repurpose these buildings. That's what happens in real estate. And it's not just commercial. It can be homes. There's so many areas, blighted areas come back. This is what it takes. It takes equity to be taken out. And that hurts the economy when that happens. It's not simple. It's really a bad event. Right now, I just can't believe it, the euphoria going on in the stock market going into the earnings season. I don't want to be the negative guy. Maybe the earnings are going to be great. I have my doubts. Somewhere along the line, just the way that inflation is finally starting to come down, earnings are going to start dropping. Is this market overpriced? The bank that is sticking its neck out a country mile is Bank of America. They came out this afternoon with another set of notes as to where they think the earnings are going, and they think the market is about 10% too high on the valuations from the article that I read. That's a lot. If they're right, they expect you're going to start seeing it starting about now. It's going to start rolling into us. I mean, we keep putting it off and we haven't seen it. So we'll see if that happens. What makes the market vulnerable, if they're right, and I don't know if they're right or not, is we've been rallying on a tear to the upside. Look at this S&P. You've come back up to the old high area. This was 41.47. This is a closing basis chart. 41.47 back here, and you've just come back to it. And that was in right at the end of the year, and you've come all the way back up. When you look at where the chart is, it's not like you're back up here, but you're not far from that. So is this market worth new contract highs? I guess that's the question. I know what I think as a fundamentalist, but I'm not a fundamental trader. I'm a chartist. And the chart's bullish until it isn't bullish. And you have a pattern of higher lows and higher highs. So until this market actually takes out right here, not the 410, it's right here. You have a market that is bullish. I told you that when you get a bullish crossover, which is when one moving average crosses the other, we started back here on the 200, then we went over the green, which is the 100 line with the 18, and the market's gone up to make new highs. That's all it had to do. You'll say it didn't do it by very much, and you're right. And the reason it didn't do it very much, I can't answer. Okay, you still have the Bollinger Band, which is all the way up at the 4220 level. That's where the resistance point is, and you have embedded readings. To me, the game will be in serious trouble if and when the red line closes under 79, and until then, no. I think that the breaks in the market are likely to keep getting bought until that occurs. When we come to the NASDAQ yesterday had its break into the support of the 18-day average. Regular viewers here know I talk about that line in the sand. The red line is the line in the sand. It's the 18-day average of closes. How I use it and teach to use it is when the market is over it, I have a bullish bias. It's filters on the other work that I have, but it's bullish. When it's under it, I have a bearish bias. And it keeps me true to what the market is doing. So the market came down in the NASDAQ, couldn't stay under it, didn't do anything, flipped itself back. Same thing in the Dow. Embedded reading strong. Where's the market trying to find support? The resistance of the 100-day average has now become the support. Market tries to get to it, and it's giving you your bounce. Keep your eye on it. That's going to be important. But in all cases, if you're embedded and you lose it, be careful. They're going to pull the plug temporarily on the market. The market that has gone so far nowhere is the Russell. I don't think you'll disagree that the black bands, which are the Bollinger Bands, the resistance and support point of them, are going sideways and the market just caught in them, can't join the rest of the parade. So sorry. In the bonds, the bond market has fallen back to the 18-day average. Now, there's an inversion here. You do know this. As futures go lower, interest rates are going higher. Now, hold on. The naysayers are saying that rates are going to go lower. Why is that going up? The 5-year note is caught in the middle of the Bollinger Bands going sideways and right here. Not the place to be. It's waiting for some shoe to drop and give it an idea of what the next move is. The dollar, I think, and this is what I did in my report 2 weeks ago, I put out my dollar report. And in that report, I was very bearish. I gave all the reasons. I gave where we were. I thought we might rally back in the report towards the 18-day average. But I said, and I'm going to stick with it, I think that as you look at it, what's going to work against the dollar is sooner rather than later we'll go into a pause on interest rates. I do not believe we're going to go to a pivot down. The pause is good enough for me. You take a headwind. But at the same time, Europe can't do this. They have to keep raising rates because they have to fight inflation, and energy is a big part of that, and they just got a double whammy. All of their energy prices went up another 10% when OPEC said, hey guys, we love you, we love to do business, but we want more money. And with that more money, what do? They got to keep raising rates to tame it. At least in America, our energy to a degree, we're producing our own, taking it in. The question is, will the corporations in the Permian Basin expand? And I don't think they will. If they're going to say, yes, we'll produce what we want, we're going to spend X amount, maybe we'll increase 5-10% with our budgets, but that's it, because we got to give the money back to our founders and to our shareholders, and they're going to keep doing that. I know you don't think they will. I do believe that they will. And we have a terrible energy policy in America. The Biden administration, and I'm not saying this as against the Democrat, the Biden administration, the president doesn't have a handle on energy. I was cracking up yesterday when I read the energy secretary going, yes, we might soon start buying the oil. Do you believe anything they say? They told us they were going to do that in October. They promised between 70 and 65. We got there. How much did they buy? Oh, none. So here we are fighting the euro. Do you buy over a Bollinger Band? You might. I will not have my clients do so on my recommendations. Why? Only 5% of the time do you stay over them. So For me, there'll be a better opportunity. And if there isn't, say la vie. There'll be something else. There'll be another energy play. There'll be something else. A chart's a chart, and you look for your opportunities. And you don't have to trade every minute of the day. I hope you appreciate that. I have clients that expect me to put out a trade every minute of the day and give them a risk that's X amount, and that's all I should be doing. I'm not that guy. Never said I was, never tried to be, and nobody's that guy. Well, they're out there, but the results will show just what they are. Higher lows, higher highs. You're trying to embed, you're not there. If you can embed, it gets interesting. Can they do anything? Well, we saw Jeremy Hunt arguing his case that the IMF has it wrong and that they can soon stop their interest rate hikes and so on. Okay, we'll see if that does it. The market doesn't think that. The market is thinking they got to stay with interest rate hikes. That's one of the reasons I think it's going up. Otherwise, it'd be like the dollar. If the other currencies around it are raising rates, why do you want to own the pound? Why do you want to own the dollar when the rates are going up there? You get a better play on your money. Here, you're not going to make any more. Those rates aren't going up anymore. You move to the hot money. Think about it. That's the logic. Hot money moves. Bitcoin, fighting at the upper Bollinger Band in sideways action. The differential now in the Brent WTI. You've probably hit an area for the moment where it's having hard times adding, or let me say it the right way, having hard times narrowing in anymore, the difference between the two. 4.5 seems to be the zone it wants to stay in. Now, as long as you're embedded, as long as it's embedded, I am in the bull camp. I hate the idea of telling my clients to buy the first challenge of a 200-day average. I just literally hate it because more times than not, it doesn't work out right, the first challenge. It's a 200-day average, right? It's almost a year of trading, and you just go through it like it doesn't matter. Well, it stayed there for over a week, and it's trying to edge itself higher. We'll see if it can. If the red line gets under 79, a problem. As long as it doesn't, I'm the one that's under the gun because this market still has an open target of the upper Bollinger Band. The same thing in the WTI. I would not fight this. I'm bullish. Do we understand that? I just hate buying it over that number. I am bullish. I don't know how high is. I can tell you that the resistance is 86.45. In gasoline, you had a correction today. So what? This was the rally. You should have lightened up your position. Now you're in a position, if the chart action is good overnight. Let's see what it does. Maybe that's where you come back in to put on another half. If you bought right into these breaks here, you were in good shape. Well, you still have the embedded reading, so I still like what I'm seeing. Nat gas, I don't like what I'm seeing. This is still an ugly market. There's still more of this coming on. If the Permian boys do that, what I said, they put in they take their budget of 30% and they increase it by 10% more of their revenue and they produce more, they're going to have more natural gas. What do you do with it? We're at that funny time of year. You don't need it for air conditioning. You don't need it for heat. You're just going to store it. So now you got to liquefy it, get it out of the country, get somebody to get it. That will happen, but you're still going to have a lot more of it day by day by day. That is what you're dealing with. So if you like what I'm doing here, I beg of you, join me in the mornings as I sit there and we do all this together. At 5:15 in the morning, I start in the futures markets and we start building charts, trade ideas, what's going on in the markets, so on. I want this in your hand ideally so that you can fully review it by 6 in the morning Central Time. I wait for the first half hour of stock trading in the morning. Why? Because the reality is the stock market needs to get the money that traded in the off market back in and have it line up with where prices closed on the close of business at 3 o'clock Central Time for the stocks. As they do that, it often takes the half hour. In addition to it, you get a lot of government data that comes out between 7 in the morning and 9. And by then, we have everything locked in for you. And now I go into the charts and I'm coming out with the recs. Today, I think I had 4 or 5 recommendations for clients. But you see how they build on the chart. So it's not, I'm writing a newsletter, buy this, do that. Let's look at the chart together. Entry, exit, stop where it's wrong, idea where it's going. All these markets. So how do you do this? Go to our website under research. You can click up here. You'll see an icon. It'll take you right to the research area. Read what it is. It's simple. You're spending more on your outdoor coffee than in 1 week. By a lot, probably in 2 days, than my subscription is going to run you for a lot of you. Is that fair? Okay. You're going to get 48 videos in a month. I'm Ira. You take care. I'll talk to you later.